Good morning, Predicted Trades family. Hope everybody's doing well. We got another fun day ahead of us. Taking a quick look at the overnight session. I guess we'll have a quick review of yesterday. So, yesterday we basically just kind of went sideways, trying to look like we were going to go up, pinned under VWAP, and then we drop. We go sideways some more. We reject VWAP again, and then we drop. And as you can see with our Beast tool, we were rejecting our open range buy zone. We got down to our destination buy zone, and that's where it reversed right back up to our open range sell zone to close out the day. But it was very interesting how sideways, drop, sideways, drop, sideways, start to get going, set one new low, and then take off hard for the end of the day. Basically, overall, point being, this was very, very controlled selling right down to the daily 8, which is this blue line that you see highlighting. Tapped the daily 8, tapped our destination buy zone, and then they ran it up end of day. Overall point being that we had that controlled selling and then a ramp up. Really, this whole half of the day of controlled selling, they were likely loading into long positions on, big tech names, maybe some bank names. We have some bank earnings this week. We have tech earnings this week into the end of the month. We got, Netflix today after the bell. We got Tesla tomorrow after the bell. So, all very interesting and not surprising that on a Monday, we didn't tank. They just did a very controlled pullback to the daily 8, loading up for hours down at the lows, and then took off. And now we have a gap up. I saw in some rooms, I'm in a few different rooms, and I saw in a few rooms yesterday that folks were loading up puts at the end of the day, and I tried to advise, this is not the environment to load puts at the end of the day after the day we had on Monday. This very controlled wedge and then blast off is a lot of positioning into a long into this week. Now it is OPEX week, so we do always want to keep our expectations in check. We don't want to be expecting, a 200-point rally on an OPEX week. It's probably not going to happen, but definitely getting some interesting moves. And as we can see now on the overnight session, that's not going to be what I want. There we go. So on that overnight session, you can see we reached down low enough just to tag our open range buy zone. If you're new to predicted trades, this is our Beast system. I output this tool every day to our members. It works on your futures, on your equity stocks, on your ETFs, and even on your options. It also even works on some internals, like VIX. Yes, that's right. You can't even have key levels on VIX every day where things react. And when you understand what these levels mean, you understand how to position on the day. You can see VIX dropped down, rejected its open, and went down the rest of the day once we started to rally. But overall, point being, on the overnight session, we dipped just enough to hit our buy zone, and then they took off up through our sell zone where we consolidated up to our midline, and now we're arriving at that destination sell zone. What this could mean is that we're a little bit extended on this gap up. It's a nice sizable gap. Can we keep pushing? Absolutely. But could we also kind of run up and hit these big key levels like 4,200, 4,205 and start to see some pullbacks for some partial gap fills and to get back to VWAP? That's something we should be ready for as well. There are plenty of times this is called a destination sell zone because when we arrive up there, we can reverse, just like when we get to the destination buy zone, we can reverse. So we want to be prepared today for some, some potential pops up first to hit these targets since we're so close to them, and to trap some bulls, then pull it back and do a partial gap fill, maybe back to yesterday's highs before heading higher. We could also get just a rally straight up because they spent their time yesterday taking position and they want to leave us all in the dust. Real quick, let me set us up on our normal prep settings. Just wanted to look at the overnight session and the lower time frames to get a feel for yesterday's price action and this gap up, which was pretty predictable. That's why I wasn't able to post it last night, but I mean the overall plan or thesis would have been to wait for it to hit our buy zone to attempt the long up with a stop right below. So going long from 41.72, 41.74 with a stop right below 41.70 would have gotten you a nice 20-point gap up. But let's get our regular settings for prep on here. And there we go. All right. So as we can see, yesterday we were in some 2-hour and 30-minute squeezes. I said that 30-minute squeeze will kind of be the guide. If we start to lose the bottom of that, you played down to the 2-hour squeeze. And that's what we got early yesterday for the reversal at that 2-hour squeeze and the daily 8 right back up to that squeeze top. Now we're guiding up overnight, which gets that 2-hour squeeze to fire. As you can see on the current candles, it is not visible. That means it has fired to the upside. We can come over to our handy dandy watch list columns and see an F on the 2-hour squeeze, meaning it has fired to the upside. We can see the same on NQ. YM still has its 2-hour squeeze intact. If you're not familiar with this, and you're new to predicted trades, this is our some of our custom watch list columns. These are our squeeze watch list columns that kind of tell us where squeezes exist on different time frames. I like to track the 30-minute, 1-hour, 2-hour, 4-hour daily. I also track the 2-day squeezes like this one up here. We also have some other custom watch list columns like POC, point of control. For instance, we've been talking about how on ES, the POC is sitting down at 41.31. But the longer we spend time up here, we can see POC jump up to something like a 41.50. And when that does happen, we want to take note because that could cause a pullback. But either way, enough about our little watch list columns. Coming back over here, we can see we have pushed up enough to fire that 2-hour squeeze to the upside. We have some momentum coming in. Now, plenty of times when a squeeze starts to fire, we see a reversal. this 30-minute squeeze fired to the downside, started to fire to the downside, and as it disappeared, we reversed right back up. That's right, market makers got wise to the squeeze years ago. Now they weaponize the squeeze. That's why we use these squeeze clouds to know where they're at, how they're going to take it to them and back. Either way, overall, we're coming up to some very big key levels. 4,200, 4,205, and this 4,211 are where a daily Keltner sits. That's what that hash line is. We also have a 2-day squeeze top sitting there. So we are stacked up with levels above. Could we not have a pullback and just start slow grinding through those levels today? Absolutely. Could we also have a little pullback to test something like yesterday's high, which I'm going to grab and add a little zone up to Friday's high, to say that we have a zone right there. A zone of support that we could come down. The bottom of that zone basically fills the gap. We also have our overnight lows if we do get pullbacks. We want to be thinking targets for when we pull back, right? So we've got this zone. If we do start to have a little pullback to, say, VWAP or to fill the gap, excuse me, hold on. Sorry about that. As we run into some key levels, start to have pullbacks, we could easily catch a bounce. 4190, 4180, 4176. If we look left, something that was resistance, and now that we're above, we want to see these things become support. So those are a number of targets for pullback, a number of targets for a continuation. It is an OPEX week. They're going to try to kill a lot of options with theta. So it lends to the thesis of a slow grind up where they're not really rewarding a ton of people on the call side and the put side, right? Slow grind meaning like we get up and hit, we have a sharp pullback. We mess around, we get up and push a little further, another sharp pullback. We could also see some profit taking that pulls us back to fill the gap. They load up heavier for continuation, and we see a strong rally. Just a few scenarios that we want to think about. We start to lose that 4180, the gap fill. Then we are likely going to test that overnight low down to 4171, 4170. Should that give out, we're likely going to pull back to this daily 8, which has been stepping up incrementally each day as we try to push higher. And you can see we pulled back to it and reversed, and pulled back to it and reversed. I'm not in any way thinking very hard to the downside till we give out that daily 8. Now yesterday we did hit puts just because the overall trend was down. We hit puts down to that daily 8, and then we started taking shots on calls. So that's pretty much the overall look on ES. Before I get going too far into where we could be going, let's take a quick look at our economic calendar. As we know, it is an OPEX week, so we want to keep that in mind. Today we have some housing data that came out at 8:30. We're still pumping higher. We only have one Fed speaker midday, and that's pretty much it. Light day. Tomorrow we have Beige Book, Fed budget. If you're not familiar with Beige Book, go Google it. We also have a speaker, but that's after the bell, so nothing to worry about there. Big ones are going to be Thursday and Friday. Thursday with jobless claims, some manufacturing and homes data, and a bunch of Fed speakers. Friday, we've got some PMI data coming out after the bell. And looking into next week, we've got some big ones with GDP and PCE that we want to keep an eye on. We also have a ton of tech earnings. As we go through the names, we'll kind of look at some of the dates. We also have some bank earnings. So, moving on, NQ. Very much breaking out. We definitely want to note these highs on any pullbacks. We want to hold those highs. Otherwise, it's a look above and fail, and we fall right back to daily moving averages. But overall, man, excuse me. Overall, we're arriving at this 13,300. Next targets, this previous high, around 13,350. And then these key levels up at 13,385, 13,412, which is right where the top of a daily squeeze is sitting. And it's getting thicker. So, if tech and NQ is going to run into some of these earnings, we do have this resistance and these key levels sitting above. So those are the targets. If we have some pullbacks, we want to see basically like 200 up to 250 try to hold. These recent highs, lots of consolidation. If we start to lose 200, it's back down to these daily moving averages. Should those give out, it'll be back down to test yesterday's lows. But overall strong. Let's see if we get just a little pullback. Some profit taking for a reload to head higher if we're just going to keep pumping. We've got our targets up. We've got our targets down. Moving on. Ready. And I'm going to try to accelerate through these names because we're already getting close to 9. Ready. Very much the same thing. Pumping higher, getting back to these recent highs. Targeting 1825, 1830, and this obvious 27.5 recent high. We also have that daily 200 at that 1832 at the top of this daily squeeze. We also have the daily 50 sitting up at 1840. So those are your upside targets on the ready. If we pull back, we want to see us hold 1815. Overnight low 1812-ish. Don't want to see us go below that and retest 1800, which wouldn't be surprising. I mean, it is an OPEX week, and look at the range. They set it last week, and they hit it back and forth, and now we're just starting to peak outside. So I only say this just so that everyone is not getting too overly bullish with this gap up on an OPEX week with a range that has been set. They could very easily make it look nice and then dump it right back into the range and make it look very horrible and then pop it back up. Let's be ready for that scenario. But we've got some key targets that they could easily push up to, looking like we're going to break out, tag those liquidity levels, and then bring it back. So let's see if they're going to let that happen. If sellers back off and buyers take control to get us up to these very key liquidity levels, then drop us back. I'm going to be keeping a close eye on ready. Could happen fast, where it just pops up quick, tags these things, in the first 30 minutes, sits there for a while, and then a rollover. Not saying that I'm like bearish, right? I just know how this kind of scenario can play out. We've seen it happen plenty of times. So, that's it for ready. Moving on to YM. See, we've got some relative weakness. We've got some rotation going on. OPEX. While NQ and ready are looking good, YM, it's basically already back and testing that gap. So, let's see if YM is going to try to hold near this kind of overnight high and low around 34,100, 34,150. If we start to lose that, then we're going to slip back into yesterday's price action and probably come back down to test 34,000 on YM. We could see a rotational day where NQ is pushing, NQ and Ready are pushing up in the morning while YM is dropping. Then they all flip directions, and what is ES going to do? Pretty much go sideways. While some of it's, while YM is dragging it down and NQ is dragging it up. Just another way to have fun on an OPEX week. So let's see if YM can at least hold at this zone and these levels from this overnight consolidation and start to reverse back up and we get all indices pushing together, or if it's going to continue to remain weak and we see rotation. Moving on, Apple. Earnings on May the 4th. Be with Apple. So, was definitely one of the weak names yesterday that hit the top of its squeeze and fell down to consolidate near the bottom before ramping up. Excuse me again, sorry. Oh, struggling this morning. So, we still have these stack squeezes in place on Apple, just meaning if it's going to push up with the market, it's going to be a slow grind to try to get through these levels when it has thick stack squeezes like this. Much like how it is thin when it starts to form, it gets thin when it's about to fire. Now, we can have instances where we push hard through, consolidate for a while, push further, and it's firing after it's already taking off. But usually when we're stacked up with, say, a 2-hour, 4-hour that are right on top of each other, it's a little harder. So keep an eye on Apple. Starts to slip back below 166. We know we're losing these highs. We're going to go back to fill the gap, retest pre-market lows, retest yesterday's lows from a reversal off of these squeezed tops. But if we can hold 165 on the gap fill and 160 or 166 on any pullbacks from the squeeze cloud, we can get that slow grind up. AMD reporting May the 2nd. So got down yesterday into this daily squeeze cloud at these key levels. We're reversing back up out of it. Overall, wanted to hold basically like 89.5, 90 on any pullbacks, which is filling the gap. As long as we can hold there, playing it up to 91, 92, 93. We have key levels all around there. Recent highs and this trend line. As you can see, we're pulling right up to that trend line. So as long as we can hold on any pullbacks, we'll consolidate and try to get on through. We start to lose that 89.5, 90. It's back to retest 89 in yesterday's low at the bottom of that daily squeeze. Amazon reporting the 27th of this month. What is that, next Friday? Yeah, next Thursday. Just slow guiding up in this channel after this strong reversal back up last Thursday. So you could draw your channels around the highs and lows, see if it continues to trade in that channel. We do still have that 2-hour squeeze in place. So as we get up to test yesterday's high, this strange little wick from Friday's pre-market or this 104, we're at the top of a squeeze. We could see some reversal and pullback to fill the gap. As long as we hold above 102.5, 103, buyers are trying to stay in control and keep it going back up through 104, 104 and a quarter to get up to 105 at the top of this daily squeeze. We start to lose 102.5. It's back to that daily 8, 101.5, daily 15, 101. And the daily 21 sits down at 100.3. but that's a little bit outside of that squeeze bottom. Moving on, Google. Reporting the 25th. Had that news yesterday about Samsung replacing Google as the default search engine on its phones with Bing or whatever. We can see this silly reaction, but Google just sat there. Didn't go lower. Not too sure that investors are that worried. We are right at daily moving averages. And we have some squeezes setting in around us. Looks like 1 hour. Yeah, mainly a 1 hour. And it's saying a 4 hour fired down. Yeah, I don't really trust that right now. Either way, was looking decent for the gap up, now pulling back, basically going to be opening flat in the middle of this wide 1 hour squeeze, right at the daily 8, daily 15, daily 21. So let's see if they want to pull it back and retest this consolidation from yesterday and these daily moving averages. Google could very easily just chop around liquidity while it waits for the market to break out and rally today. Just saying, maybe this isn't going to be one of the stronger names that leads us up. But overall, let's see if we can hold above 105. Trying to hold above 106, 5.5, 106 right now. If we can hold there, it's a play up to 107.5, 108, and back up to 109 where we topped out at this daily squeeze top. But if we start to lose that 105, then it's back down to test these wicks from this reaction and the daily 15, daily 21 down at the bottom of that squeeze. Meta reporting the 26th. Gonna have a stacked week next week. Very similar move as Google. Maybe fell a little harder for new lows in the cash session compared to Google. It kind of got its move out of the way pre-market. But overall held those squeeze bottoms, held above that daily 8. You know, all of our daily MAs on most tech names are very bullish. And we're just riding up that daily 8. At some point we're going to get a reversion to the mean. We'll have to see. If I had to guess, it'll probably be next week with big tech earnings and GDP PCE that will probably make it volatile enough to get us an interesting move back to the mean. I don't know. Don't want to make any silly predictions too far ahead of time. Overall, Meta opening around this 220 and basically, you know, a decent little gap up. Actually, it's not coming back yet. See if it can hold above 220, and if so, it's a play up to this 222.3 recent high from yesterday's pre-market, the top of the squeeze. If we can get past that, you know, target would be up to like 225, 225.5, where the next daily Keltner sits. If we start to see tech breakout and squeezes fire up, if we start to lose 220, it'll be a play back down to 219 to fill the gap-ish, and then 218, 217.25 near yesterday's lows at the bottom of the squeeze. The daily 8 will be stepping up near 217 as well. Microsoft reporting the 25th. Nice move up. We can see that, like, the reaction. I love this market. The reaction on that news, Microsoft took off with Bing being the new default, but we had squeeze tops sitting there, sent it right back down to where the daily 8, where they loaded up for the actual move. I love it. Buy the rumor, sell the news, and then make the move. Keep an eye on Microsoft. Looks like it wants to try to be a leader. On any pullbacks, want to see it hold above 290.5, 291, near those recent highs where it reversed. As long as we can hold above 290.5, 291, we can continue to try to push through this 293 up to this 294, 295 at the top of this daily squeeze. It is a thin squeeze, so we can push right through. We do have a daily Keltner near that 293.73. And overall, if we can get through this 295, it is a play up to 300 where that third Keltner sits. So definitely keep an eye on Microsoft, Apple, so the names that are trying to lead. Can things like Google and Meta catch up? Meta has been very strong recently. Can these things catch up? Yes. But we definitely want to keep an eye on leaders when they're trying to lead. Netflix reporting today after the bell. Big dump yesterday, back to the daily 50, daily 21 to liquidity. Wouldn't be surprised if they keep it close to liquidity going into earnings while they load up to the upside or the downside. Overall, talking about earnings. Where is that daily 200? I feel like it's way down there. Yep. Overall, with earnings, Netflix, wild card. They love to do crazy stuff. That's why I scrunched this chart up so we could see crazy levels. As we sit near 333, which was that previous earnings gap down point, right? If you go back, I'm not going to do it live, but go back and look at Netflix. We had previous earnings where we were at 330, had a big old drop. We finally fought back. Now we're going to be probably closing, if I had to guess, right near the same spot. We could have a crazy reaction that dumps us down to something like the daily 200. Not saying it's gonna happen, but Netflix makes silly moves. So, just some potential targets if we do have a silly reaction. Obvious 300 target, and then this 280 where the daily 200 sits. We have a crazy reaction to the upside through recent highs, 350, 361, 365, 378. Just some key levels that we want to keep in mind. We do have our daily Keltners, 365 and 300. But I have seen Netflix move outside those daily Keltners and stay outside until the Keltners catch up. So, overall, not going to be playing this today, not going to be playing it into earnings. I don't like to play those kind of wild card earnings where they're going to act insane. But I'm going to keep an eye on it, see how it impacts the market, and play accordingly, right? So, not really, we're in between 2 daily moving averages below and 2 above. Probably going to stay in this range today. So not really going to go heavy into what's the thesis on Netflix. I'm more just going to sit back with my popcorn and get ready for the show. NVIDIA going to be reporting way at the end of May. So we got time there. Big old gap up. I think, was NVIDIA mentioned in maybe some of that news with Microsoft, Samsung, yada yada. I can't remember. Either way, nice gap up here, coming back a little bit. Let's see if we can hold that little overnight high. And, in fact, let's just connect this to, I always look left. Whenever I'm about to say something, look left. To these recent lows over here that we tried to hold. Now that we're back above, we'd want to see this zone try to hold. If we start to lose this zone, it's just a look above and fail back into consolidation, right? Just like how we started to get going and then right back into consolidation. So let's see if this zone can hold. As long as we can hold this today, we're going to be opening near it. Hold around 272, 271 and a half-ish. We can try to head back up to these pre-market highs and to these recent highs near 278, 280 at the top of this daily squeeze. We start to lose that 272. It's right back to these daily moving averages and consolidation. QQQ. Nice little gap up above 320. Going to connect some recent highs here. I grabbed the wrong thing completely. I'll just kind of make it ugly. There we go. So, basically, now that we are above 320, let's see if we can hold it on any pullbacks near these recent highs. Actually, that's not what I want to... Let's redo that. Sorry. This is why I don't chart live on everything. That's more what I was going for. Virtually the same stuff. Overall, let's see if 320 can hold on any pullbacks. At the very worst, 319.70 is the furthest I'd want to see. Below that, we're just likely going to come back into yesterday's range, back below 319 to 318, this 317.75. But if we can hold above 320 in this zone, we can continue to try to push up. We do have a little 4-hour squeeze starting to form right where we are. So I wouldn't be surprised to hit that, a little pullback to 320, and then continue up to this 322, recent high 322.16. Overall, trying to get up to 323.5, 324 with the top of a daily squeeze and the next daily Keltner sits. Move on to SPY. Wrap this up. I'm running way over than I normally do. So SPY, about to be opening above 415. As we can see, we got up to 415 the other day, so wouldn't be surprised for a little dip there. Partial gap fill. Basically a half gap fill is right around that 415. As long as we can hold there on any dips, still looking to continue to try to push through this 416. Overall goal getting up to 417.3, 418.25. But we do have that pesky 4-hour squeeze that's still in place right near this 416. So let's see if we have a pullback off that 4-hour. Let's see if 415 can hold. If not, we're going to fill the gap back to 414 and maybe do some consolidation above it, since we have been, slowly kind of ascending wedge into 414. 414 is a huge key level. So, yeah, it actually sets it up pretty simple. Let's see if on any dips we can hold 415. If we lose it, we're going to cascade right back to these recent highs. Should we lose those, right back into this range. Likely try to continue to hold this up, this ascending wedge, right? And if that truly starts to give out, then we could start to see something like a reversion to these daily moving averages below. But overall, guiding up, starting to break out through this recent resistance. We want to see that resistance hold to continue higher. Tesla. Yesterday, much like the market, a dip and back up. Not a crazy gap up. It doesn't look like it wants to lead, so shouldn't really have our key focus. Plus, it reports earnings tomorrow after the bell, I believe, right? Let's double check that. Yep, tomorrow after the bell. So, again, like Netflix, I'm not going to be actively playing this into earnings, but I'll definitely have this on watch. And I love to play this after earnings, especially going into the end of the week. Even though it's an OPEX week, this one could be a fun wild card after earnings. So, I'm going to go crazy into thesis. We're in a squeeze. We're in between key levels at 190 and 180. Likely going to stay in this range going into earnings. VIX. Trudging lower. And as I've said yesterday in prep, we have levels lower on VIX and lower and lower. Like, VIX can keep going down. So many people in so many rooms have been screaming, VIX is below 18, we should be shorting everything. Don't be the first guy to the party, right? Let them start the party, tap the keg, get some folks there first. Let VIX start to show signs of reversal and getting back above 18 and whatnot. Because we can just keep slowly grinding down. Overall, for continuation today, on any pullbacks, I want to see VIX stay below 17 would be ideal for very bullish, and we're just going to keep rallying. But as we can see, we're already starting to push back up to test. So overall, we'd love to see it stay below 17 and a quarter, and at the worst 17 and a half on any pullbacks. As long as we can stay below that and start to take out that pre-market low. Next target 16 and a half down to 16 and 15.8 where a daily Keltner sits. Maybe even down to 15.2 where the bottom of some daily squeezes sit, or 2-day squeeze. But if we are going to see some more dramatic pullbacks today, we will likely see VIX get up above 17 and a quarter, 17 and a half, and try to make the fight back to the daily 8 near 17.9 and 18. That would engulf yesterday. As far as VIX goes, doesn't mean that it will translate to like SPY totally engulfing yesterday. But falling back into yesterday's range could bring VIX back up to this daily 8 and to 18. So we've got key targets on all of our tickers and even VIX. That's it for prep today. Hopefully everybody found this helpful. If you're new to predicted trades, there's a link in the description for you to join our Discord channel for free, our Discord server for free, where we post every day about what we're doing. We are a paid service because we offer that amazing tool that I showed at the beginning of the day. It works even on your options charts. Let's see, I can pull up maybe some of the trades we... Oh no, I need to wrap this up. But let me just go to our live trading room real quick. Come on. Yeah, here we go. So, our tool even works on your options chart. This is one of the options I was talking about yesterday, and how, it comes down to our buy zone. This red hash line, blue hash line is our beast zone, our major buy zone. And this option just got right down to it and then took off right back up. And, we post trades like this all throughout the day. Here is another one on the call side, the 413. Some folks hit from 30 cents up to 60 cents a couple of times. Some quick doubles. Yeah, there's just plenty of examples of how our tool works on options, equity futures, you name it. So overall today, let's see if we can hold up to these recent highs and keep pushing higher, or if we're going to fall back into zone for some OPEX chop. Thanks for tuning in, folks. Good luck today, and we'll see everybody in the chat.